Trading Market Technicals morning call video for Tuesday, June 18th. Well, markets did get a little bit of reprieve, popped up real nice. We gapped open early on and pretty much stayed in a range most of the day. The volatility was pretty subdued until there was a rumor out that the Fed was now thinking about again pulling in the reins on their asset purchase program, and that's in the markets lower right around 315, and then the markets rallied right back up again, filled the gap, which I'll go over with you. But real quick, Dow Jones up 109, Nasdaq up 28, S&P up 12, and the Russell up 6.5. So we did get a nice little pop up. Now, the Fed will be speaking tomorrow. They'll be coming out with their minutes, and it's going to be really important. This one will be most importantly because it is June. He did mention, Bernanke did mention that he was going to reduce his purchase program, which is QE, and markets did sell off for a few days anyway, and then we did get that recovery rally. So this is going to be a pretty big spot where if the markets are going to continue its move higher, or if the markets are going to now start a correction and retrace. Now, we are in seasonally. We do have a little bit of weakness coming into May and June. Obviously, May did not happen. We do have a little bit of weakness now in June. But again, the Fed can easily just talk the markets up and or down, however it wishes to, which way the market wants it to go. So believe it or not, that's the power of the Fed, and we don't want to be fighting the Fed. So this week is also options expiration, and we do have usually a bullish bias for the week. Excuse me. So right in front of me, we have the S&P. We have open interest of calls and puts, and the theory usually, and I cover this every month, and believe it or not, it actually works pretty well. But obviously, we don't want to trade just off that. But if you can, if you really look at the past months of options expiration, you can see that the market's really inspired to cause most pain to the put buyers and the call buyers. And in order for that to accomplish, we want to look at where the open interest is. So if we look at the SPYs, it closed at 164.44 yesterday. And we have our puts outnumber the calls 2.2 to 1, the same as last month. Basically, it's right around the same. So the call interest is the highest between 160 162, and then you got 168 right around this area here. So as you can see, this is pretty much where the calls are in blue, and in the red is the puts. So now the put open interest is highest at 120. You have 130, 135, 140, 145, and then between 148 and 168 again has its high. So there's a little overlap in the 160 area. So the highest call is call strikes are in the mid 160s. And then the dividing line seems to be about 166 or so. So really the good level, today's close of 164.44 will give you a good level right around that area to be flat trading for the week would really cause pretty much the most pain, or a small move up would even cause a little bit more pain. So we're looking for flat to slightly move higher for the market to cause most pain to the call and put buyers, okay? So that's just an idea, just something to take note of, just kind of fun to look at. But really, you got to take, it's something really that I like to look at on a regular basis. Now, you throw the Fed in there on Wednesday, really anything could happen. So you got a lot of fireworks in the cards, and I'm going to cover gold and oil as well, because they're gonna definitely move on what the Fed's going to say. And also, I mentioned gold and crude oil looking really interesting for further trading in the coming days. So more oil than gold. But now let's go into let's take a look at some of our indicators, see what they're talking. All right, now we have NYMO, the McClellan oscillator here. As you can see now, we did break back above that 20 Bollinger Band, that mid-range, and now we're just about getting into that break-even area of neutral territory in the market, instead of being overbought or oversold. So we did get that pullback. We tested it with a higher low from the previous low, and now we're back up here. So really not telling us anything other than that the markets can go either way, and they are not really overbought and or oversold. So really not giving us much of anything. But I just wanted to kind of show you where we are from there. Now, let's take a look at some of the indicators here. Now, let's take a look at copper. As you know, we like to watch copper. Copper now is in a range, making another small pennant, if you could see that here, within the larger one that we broke down from. So copper really isn't giving us much of anything other than the fact that it remains weak, not good for the overall market. Okay, let's take a look at the FXY. With the yen being higher, staying in this area here, that also does not hold well for the bulls as well, because if the yen continues to rise, the way the market has it right now in its relationship, higher yen, lower equity prices. Believe me, don't ask me why. The yen should not be rallying. The Nikkei should not be rallying. They have some serious issues in that country. But nonetheless, however the markets take it is what we have to look for. So higher yen prices, lower equities. Right now we're holding in this area. So if we start to break down, if the yen starts to break down, then I could see the yen actually coming into some weakness, kind of bull flagging right into these area of support right here, and then start to rally again. Again, I do think that we're still ready for a small correction. When, that's another story. But the Fed can actually hold the cards for that answer. Take a look at the emerging markets. Again, guys, not good if you're a bull. The markets can shrug off a lot, and it can actually have really take a look at the emerging markets and worldwide markets. You could see that as equities are moving higher, emerging markets are diverging away from equities. So it's not a good thing if you're a bull, at least in the longer term picture. The short term, you know what, it is what it is, and if you're day trading, really doesn't matter too much. But it's also good to see what the overall picture is telling us, you know. So that's actually not a good sign as well. Take a look at euro. Euro here has this huge head and shoulders pattern, still valid, hasn't broken the neckline yet, so we haven't had a trigger. But the euro is pretty much extended here in this area. So we'll see if the euro starts to come into some pressure and then the dollar starts to really rally here. That's something that's interesting in the coming days. Take a look at the tick. Tick broke down, but stayed above the line here. So that's still bullish. I want to see the tick start to rally into the 3 and 4 area to get away from that 0 line. But right now, it's standing up here above it. Ever so slightly, though, so that's something that we need to really keep an eye on. Look at the stocks above the 50-day moving average. Although the market moved up yesterday, had a couple of good days, we really haven't gone anywhere. So the stocks that are trading above the 50-day moving average are very minimal. We haven't really gotten any a big move to the upside. So that's telling me a lot of the ETFs are moving higher and the individual stocks are not. So that's also a little negative. Take a look at the NASI, the weekly we always look at, come on Monday. And we have a sell signal last week. So we did get it, obviously, today small. Plenty of room to go lower. So, guys, keep in mind, just keep that in the back burner, that we can move lower here on the NASDAQ. So let's take a look at the VIX. And the VIX here still inside the Bollinger Band, so still on a buy signal for equities. Okay, so that's something interesting here. But if we break above this 19 area, we can get a real good shot up to the 2021 area. So right now we're just holding true with the VIX right in this area here. So we'll just kind of tomorrow's going to be a big day, guys. It's going to be a real big day, and we want to really be light going into tomorrow. Definitely don't want to be carrying any positions overnight, and if you are, I would definitely buy some protection either way, just in case, if you're really looking to hold that. All right, let's take a look at gold. I circled this weeks back. This is a weekly chart of gold. And I said a break below the 200-day, we get a washout. We did. Now we're just holding this area. I think you're going to see, I'm going to say at least 1250 to 1275. That's going to be the next downside target, especially what the Fed does and what he says. All right, what Bernanke says. Whatever he said, whatever he says tomorrow, I think that the market's going to react. Obviously, gold and oil will react. Excuse me, I can't talk this morning, in a big way. Take a look at WTI, West Texas Intermediate. Now, this is a big symmetrical triangle, and we broke out of this triangle. What I'd like to see, and I said this to you last week, I would like to see a bull flag, high or low, testing this trend line, upper trend line, and then really go. And I mentioned about a week and a half ago about how this could be a catalyst for oil with the Syrian conflict going on. And if the U.S. starts backing the rebels, I really do think that the markets are going to go higher and they're going to put a premium bid into this oil. So just let's keep an eye on this for a trade. Not yet. I'd like to see a pullback first, and then we might have a trade here in the longer term, kind of hold out and maybe buy the USO or buy some options, some long outdated call options on it. But definitely interesting here. Definitely interesting to see. All right, so let's go into the charts. Take a look. We have a weekly chart of the SPY. We haven't really gone anywhere in the last 4 weeks, as you can see from this big move up. So now we just got a sideways consolidation, kind of unwinding the overbought reading, which is bullish. Nothing wrong with this at all. Longer term picture looks great. Monthly, weekly charts look fantastic. Okay, daily a little bit extended, but we could even get a pullback to 1550 and the market still be bullish here. Okay, now we do have this trend line here, as you can see, and you really don't want to break this trend line lower, but we still have this trend line support area coming in at 1550, 1570. So even if we did break that support, we have the bigger picture coming in here. So again, still bullish, and that would really unwind this overbought readings in the MACD, RSI, and the stochastics on the weekly chart. Here is the daily chart of the SPY, and I mentioned here, you can see here we have this sort of this bull flag pattern here, and we have this flagpole right up in this area. 1600 is going to be a big area too, and as you can see here, if I move this up, we have 1600 as support, we have the 50-day moving average, and we have the long-term uptrend line here that goes all the way back from March. So a lot of support at the 1600. So even if we move back into the 1600 area, we're still in bullish territory. So just keep that in mind as well. But still, would be a nice little move higher. Nice little move lower, small correction, and then that wouldn't be too bad at all. Take a look at the monthly chart of the SPY, holding above this 159-ish area, which is now support. So doing quite well. Again, the target would be the high here in the spiders. Take a look at the weekly chart of spiders, holding up well within the channel. So nothing wrong with the weekly chart as well. Bullish, still remaining bullish. And daily chart, we have this bull flag pattern. We do have this confluence area of support, as you can see here at the 160. And we kind of broke out of the, we closed above the uptrend line here. So we did break out, spiders did break out. So let's see if we can, and we definitely unwinded our overbought reading. So let's see if we can kind of push through here and get some legs. But again, I don't think much is going to happen today. And because with the Fed speaking, I think all bets are going to be off. And I think the markets are going to, if anything, maybe take a little bit of profit taking. So you might see a little weakness today. But tomorrow is really going to be the Fed speaking is definitely going to really put the trend in, I think, for next days and at least a couple of weeks. Here's the 30-minute chart of the spiders. As you can see, we gapped up and we were sideways all day. So really, a really lackluster day for movement. And then with that rumor of the Fed now maybe thinking about again reduce its asset purchase program, QE, boom, we got a sell off and we rallied right back up again. So a little volatility at the end, but most of the day was pretty quiet. And as you can see here, we back tested this downtrend line of support, filled the gap, and now let's see where we go today. Today will be interesting as well. Here's the diamond, same thing here. You can see the pattern recognition, guys. Bull flag patterns in all of the indices that we follow. And this one didn't get quite above it. We're still at the 20-day moving average. So the diamonds have a lot more work to do than the spiders. Transports here still acting quite weak. We're still below the 50-day moving average. We are below this long-term uptrend line from November, and we are sitting at neckline support and below. We're above the 50-day moving average here. So again, transports here undecided on which way it wants to go. So let's see if we can get some kind of clue of where the leader wants to be headed, and that will probably put the that'll probably give us some idea of where equities are headed. Here is the IWM. It's holding up a bit better than everybody else. And as you can see here, we have the 20-day moving average, and we are slightly above it, just like the spiders. Goldman Sachs staying quite well, actually, well bid up above the 20-day moving average. So a little bit kind of inside day here from the last 3 days. So we're just holding here. But if we could break 166, I think this Goldman looks fantastic for really start to move much higher, much higher. Okay, and if you look at the XLF, excuse me, XLF really didn't do too much, but again, looking pretty constructive here. So the banks are doing well. With yields moving higher, banks are doing much better in their bottom line. Apple not doing too well, as you can see, just holding that 50-day moving average. If Apple breaks lower, you're going to get a flush again, guys. Back to this area here, this downtrend line, and this horizontal support right up in here, which will be about 418. Okay. Lastly, the Qs. And the Qs really didn't do too much. But again, weaker than the other indices that we follow. As you can see, we're below the 20-day moving average, and we're below trendline resistance here. So let's keep an eye on it. It's going to be a big, important day. Keep it light, guys, the next day or two. No reason to throw on a lot of positions. No reason to be caught in any positions. I'm looking to just day trade some stocks, the best setups, and then really wait until see what happens tomorrow with Ben Bernanke speaking. It's going to be interesting. The fireworks will be out tomorrow, no question about it. Have a great day, and we'll speak to you tomorrow. Take care.